Yesterday, we learned about the spike catcher, how to trade, and how we can align with the RSI. Today, I'm going to give you another filter which is more accurate, and it will give you good results when you will use that filter. We will use here alligator indicator. You will find in the Bill Williams indicator section. Here you will find the alligator. The setting of the alligator, which is recommended, that 100 jaws period, 100 teeth period, and 100 lips period. The jaws cannot be shift, it will be 0. Teeth period will be shift 15, and lips period will be shift -15. The method, you select a linear weighted and then apply to close, then OK. In the color section, these colors, blue, red, green, whatever you use, it's up to you. These are the default colors. I'm using these colors. It will look like this one. Okay. So look at the alligator, the moving averages. When there is an uptrend, the condition of the alligator, what's showing you? Here it is a uptrend. The lips period is above the jaws period and teeth is below, and these both are expanded. This means that the trend is strong. Trend is strong. And when the trend will try to change the condition, you will see here what is the condition of the alligator. The lines are crossing to each other. It is showing that price is making the range, and possibly it can be moved down for the downtrend, or it can move up. It is possible. But mostly when we will see after a strong uptrend and we see the lines are crossing each other, it is a sign of downtrend. Downtrend can be happen. It can be long-term downtrend, it can be short-term downtrend, but this is a sign of the trend changing. Before, when the trend was downtrend, this trend was downtrend. After changing in an uptrend, see here, the alligator lines are crossing each other. After sometimes they start in a direction. So it is necessary that when the trend will change, sometimes it will give you the ranging, and then it will start in a trend. So when the spikes are crossing the alligator upper level, which is the teeth period, and then don't think that immediately trend is started. It will range first. After ranging first, when you will see in this range, which is the level, your level will be this one. This level is crossed. Now the trend is started. Now you can think that market will move in up direction. You can enter from here, and if you want to hold the entry, you can hold until you see it is again crossing. From here to here, this will be your period where you get the profit. And when these levels are expanded, not matching each other, not crossing each other, don't expect there will be any downtrend. The downtrend will be expected when these lines will cross each other, and then you see that the lips shift to the downward and teeth shift to the upward, and then the trend will start. But starting of the trend, there will be the range. When we are talking for the downtrend, when you are getting these spikes, just to focus on all the spikes in this downtrend is they are crossing the teeth period. These spikes are below your blue line and the red line. What it means? That the trend is still not started. In these spikes, we cannot enter. We cannot expect the trend from these spikes. When you will see it is trying to break and alligator is trying to shift their position after some range, then trend will start. See here, in this area, there was a downtrend, and the all spikes are not crossing your alligator. It means you don't need to enter. After when it spikes, it crosses, and then after price move down, it creates a range, and then after spiking, it's move up, and the alligator is expanded. Now the three lines are parallel, not crossing each other. Trend started from here. Then you can see how the trend is working. It is strongly moving in up direction. After that, here price changes the direction, but again spikes appear and the trend continued in the same direction. But finally, from here, you can see when the next time trend started, it broke all these lines and then again start the next wave. But here we got a spike. This spike does not broke these levels. So you can see after that price is moving down. So this is your best filter for trading the spike catcher on the alligator. On any pair, you can trade this one. We are going to save this template and we will check this template on all other pairs. Okay, so on the move 500, okay, the same template we load here. See what you are looking at, a downtrend. There is a downtrend. Here price changes. If you confirm that the trend is changed and if you enter with the signal, like this signal you entered, but if you find that yesterday technique, if there is a M, RSI, or if it is breaking this moving average, then it will be your stop loss. Then don't wait for the more. Market will move down and again it's continue the downtrend. So this is totally a downtrend. Still the uptrend conditions are not muted. In a higher time frame, you can also see it will be the downtrend. This template switch on the 5 minute. When you will switch on the 5 minute, you will see what is going on. It's a downtrend. This is a strong sign of the downtrend. Okay, so if you are trading on the 1 minute, the condition like this one, when you see, you can trade all the signals, it will work for you. And when you want to exit from the signal, where you get the signal which is not giving you a spike, if there is an M condition, you can exit. Otherwise, don't enter. If there is an M confirm, don't enter. If you enter wrongly, then if this level will broken, then get out from the market, exit from the market. Don't wait. Market will change the trend direction. Again, see here, a downtrend started, uptrend started, you got the signals, you traded, and then this signal which not give you profit, when it crossing this blue line, then exit from the market. Don't wait for the market. Market will not give you the profit. It will go down from here. The same template on the crash 1000, you can see here, we are loading this template. When the spike catcher signals are up here, the condition of the alligator, you can see how it is showing you the trend. The trend is very strong. You can take all the opportunities and then you will get the spikes. You can make a profit. When it is moving up, so this after this downtrend, when it's moved up, so what will happen? A range will create it. You can see this is a range. After this range, now the price is showing the upward direction, and then it will move up. You will never see the big spikes in a downward. Now, simple spikes or small spikes you will find which will not cross the alligator, again market move up, which will not cross the alligator, again market move up, and then you will see the uptrend here. This is a very best technique to filter your trade and trade with the spike catcher. Same template on the crash 500. See here what the alligator show you. There is an uptrend. We cannot trade the uptrend. If your spikes broke the alligator, then think the trend can change. If the spikes are above the alligator, it means the trend still is in an uptrend. You can see here the condition, how it's very strong. This is a downtrend, a condition how it's strong. It's an uptrend, don't need to trade. It's a downtrend, how it is a strong condition for the trade. Right? Any question?
Yes, sir, please.
Yes, Mohammed asked.
Wait a minute, please. On it's broke the level, but it didn't change the alligator.
What is the question?
There is the spikes break the alligator and didn't change the direction of the trend. Why?
Because trend again started.
Okay, got it.
If the trend cannot start, definitely the market will change. Here the trend is started, then it changes the condition. When the price move up, again spike start, and then again trend goes into downtrend. So this is a pullback. This is a pullback until you clear that this is a clear shifting. Lips is shifting at the topward and teeth are shifting at the downward. Then it is a confirm that uptrend is started. Here they are not shifted. So if when shifted, then you can confirm the trend is started, right? And you can see here that was uptrend, right? When the trend started, what you found? A range, right?
Right, ranging.
After range, when trend starts, it expanded. The position of the alligator is changed, right?
Right.
It is confirmed now. It is confirmed now. And what I told, the range low is which one? This is the range low, right?
Right.
When the range low will break, do you see? These lines are expanded, right?
Right.
And now it is confirmed. Now you can trade, start from here.
Okay.
Here, sometimes price retest or sometimes price pullback, but there is any range? No. So we cannot expect an uptrend until we find a range like this one, right?
Right. So here in the second, when the break twice, it has given two signals.
Here, right?
So we enter here and break and take the stop loss at
this one, right?
No. The one before.
This one?
Yes.
You got a signal, right?
Two signals.
Two signals. That second number signal is not tradable. The second number signal is not tradable because when you entered, what was our strategy that when first signal you enter, and if the spike miss here, this trade you will close here, right? This trade
Right.
you will close here. And
Here.
the signal which we are taking, we are looking that if the last spike and previous spike have a low and lower low, then we are taking the signal, right? Now this spike and this spike have a low or lower low? No, it is a higher low. Okay, so now this signal we are not taking. We will take after this spike, this signal we will get. If we are trading signal to signal. If we are trading signal to signal, but if you entered here, right? By example, you enter on this signal, and now alligator condition is saying you don't exit from the trade because we are in a trend. We are in a trend. So only your one entry is running. Your first entry closed here, right?
Right.
And then again you enter for here. If you are trading one entry and whole trend, right? So
Right.
you are not closing your trade here because the condition of the alligator, it is not meeting for the uptrend. When it will meet in, then we will close the trade. Otherwise, we will hold this trade and then you get this profit. Here, the conditions are meeting for the uptrend. The spike is missed here. And then you can see this lifts. First of all, they will cross the blue line. It crossed and then it crossed teeth. Now they are shifted at topward and the teeth are shifted at the backward, at the lower side. Now it is confirmed the trend is
changing.
Started. Downtrend wave is enough now. It's end, and now the price will move in up direction. We can close the trade here. But if you are trading the signal to signal, then the logic of the signal to signal which I teach, use only that logic and confirm just a trend with the trend alligator. That if alligator allows you, you can take a signal, you can wait, you don't close until the alligator changes the condition, right? In this condition, if you are not using the spike catcher, only you are using your own price action. In this whole trend, you got so many spikes, small. Here you know that on every spike, market creates a higher high. Every spike, market creates a higher high, right? So this is not, it is an uptrend. In an uptrend, when alligator, this spikes crosses the alligator, then you can expect a trend change. Otherwise, don't expect. In this, don't trade. It will give you the losses, not the profits. Okay. But
okay, I have a little suggestion here.
Yes.
Yesterday, someone asked me about the market structure, right? I don't know who asked me about the market structure. Now, here is the simple example. Now the trend is going up. This is your low. This is your high. When it spike, what it does? It takes the high, goes back up. Now this is your low, high, right? It come back, taste it, go up. What it is doing? So this is called a market structure, correct?
Correct.
Go up,
Yes.
retest, go up, retest, go up, retest. That's your market structure. Okay.
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 So when you enter here, after any signal, which will be your exit first? Here it will be exit, or here it will be exit?
The second one.
This one?
Yes.
Okay. When again you enter, right? So now the trend was changed here, right?
Right.
Trend was changed, but trend cannot go in up direction. Again, market goes in a down direction. But spike catcher will give you signal not here, because when spike catcher algorithm confirms that the trend is started, then it will start spike giving you signals. But in your price action, what you are thinking here? The trend is started again, right?
Right.
So again, you can enter at this area, and then hold the entry. Again, price is breaking up. So here it is a what? A small spike after this big spike. And the price is non-stop moving in up direction. Two spikes are missed. This is a sign that a trend is now going to change. And then trend changed. You can exit from the blue line. Exit from the blue line. Only you
We
got
don't.
this one, right?
We don't wait. Okay. We don't wait to it cross. We wait just for it reaches the blue line.
When the price reaches the blue line, the lips will cross over the blue line.
Got it.
It will cross over when the price reach to the blue line, lips also cross over this one. So now it is a risky. If we hold, we know that price will move up. After some time, it will come back again on the same level. Is it the same level, right?
Yes.
The pullback you will find. But why we wait here? Why we hold this trade here?
Yes.
It can be the maybe 1 hour. Why we wait 1 hour? It is a confirm. We got the trend. We got our we got some profit also. Then why we need to wait? In the loss, don't wait. Small losses are good. Big loss, big profit. Expect big profit and give small losses only. Again, so now here the condition of the alligator, what is showing? It is a strong trend or it is a weak trend?
Ranging.
It is the one kind of ranging, because the lines of the alligator is crossing each other again and again. So in the ranging, what you will expect? Only one spike, two spike, one spike, two spike, right?
Right.
But don't expect a trend here. In the ranging, you can trade, but only expect a one spike, exit from the trade, again wait any level, enter, exit from the trade. So one spike, two spike, only you can get. But if there is a trend, then you can take advantage of the trend. Here, if you are not entering at this area, but after this spike, it is confirmed that trend is changed and this alligator is showing you that we are in a trend now, right? So you enter here and hold the entry. From here to here, when it crosses this area, okay, if you want that 3 to 4 minutes more, I am waiting, maybe on this, because alligator is also a moving average, maybe I get another spike. But the last level will be which one? A red level when crossed, then close the entry. Then close the entry. This one and this one you can hold for the test. But this wave is now complete here. Market creates a range. Again, it's spiking. Again, the trend is started. And these lines, it's confirm you the trend is started. Again, you can enter and then wait for the condition where we need to exit. So it is very simple. It is not a difficult. It is not a difficult. Yes.
But can we trade this market without indicator?
Can we?
Can we trade in this market without indicator, these moving averages? Is it possible?
In which market? In a boom and crash or any other market?
Yes, boom and crash.
Yes, boom and crash, you can trade.
Without the moving averages, because it's getting me confused.
Don't use then. It is a filter. This is a filter just. This is a
Okay.
just filter. You don't want to use the moving averages, don't use.
Okay.
This I'm giving the filter when these conditions happening, it will give you the filter when to trade, when not to trade.
To trade.
Okay. You use the yesterday RSI and indicator condition only. It is
Yes,
enough.
yes, the RSI is on that.
Yes.
Well understood.
But you know that every person have a different thinking.
It's
As
true.
you are not understanding the moving averages, yesterday maybe some members not understanding the RSI, right?
Yes, sir.
Maybe they will understand this moving average, which is clear.
Okay.
So that's why
Okay.
whatever you understand, which is easy to you, you can use that one.
Okay, sir. Yeah, I want to ask.
Okay.
Moving averages, you can use it to know downtrend and uptrend, right?
Yes. Only we are just confirming the downtrend and uptrend, and there is no any other idea about these things.
The
Only
moving
we are
averages.
using for the downtrend and uptrend.
And
So
uptrend.
why it helps? This is you are helping. In this condition, it is suggesting you don't trade. We are in uptrend, right?
Exactly. Correct.
So in this condition, if you enter, you will be not taken any profit. You will be get the losses from this market.
Yes.
This condition is not trading for this down spikes, right? Here, again, you can see this condition happen. You can take advantage.
Okay, because it has crossed the moving averages, right?
Yes. Now,
That it has crossed
look
it
at
down. Okay.
now what is happening? The spikes are breaking the moving average. What is showing
Yes.
you? It is crossing, right?
Yes, yes, it's crossing.
It's crossing. Now, when
Yes.
the next spike will happen, it will come to your position, right?
Yes.
And then you start the trading. It is your confirmation the trend is started. But someone if thinking that I can get a confirmation from here and then I start from here, sometime you will get, but mostly you will be trapped.
Okay.
So I don't want that. Don't think that you will get any signal at the top of the level. At the top of the level, the ratio will be 50%. You will get 50%. You will be trapped like this one, like this one.
Yes.
So now the condition is formed. When you will get the signal from the spike catcher, then it will move down. It will move down.
Down.
Okay.
Okay, sir. Once we see the spike catcher after the crossing, then you can take the trade from
Yes.
the last slide you showed me now.
Yes.
Okay. Okay.
Okay. So in this
Yes.
condition, now the C1000, what is showing you? The spike is broken, the alligator or not? This spike is not broken the alligator.
It does not. Yes, it does not.
So it is not confirmed that the trend is started or not. Still, there are chances market can move up.
Move up. Exactly.
Okay. Here,
Yes, sir.
see, when these spikes happen, alligator changes the condition, right?
Yes.
Now it is possible it will move up. It will move up.
I'm seeing the spike catcher arrow there.
Yes, the arrow is also
Yes,
appear here, right?
Yes, yes.
See here, and the B1000. Now signals are appearing here, right?
Yes.
But the confirmation from the alligator is showing it's a range. It is possible market will not continue the uptrend, right?
Yes, yes.
So in this condition, we are not using these signals, right?
Okay.
In which condition
we
we are
wait.
using the signal? When the alligator is expanded, right?
Okay.
So this condition in the professional language is calling that the alligator is sleeping. Alligator is sleeping. When alligator is sleeping, there will be the range market. When alligator is awakened, it will be the uptrend or it will be the downtrend.
Okay.
So here now the alligator shows that I'm sleeping. There is no trend. There is no trend. Here alligator was sleeping. and then again alligator awaken here, and then you can see the trend started. This is a good move.
Moving up.
On
yes.
the 0.2 move, if we catch this move, it will be the $20 profit or $15 profit.
It is a very good one.
And there is a help also in your analysis that I am doing right. When in the price action, you are checking and you are deciding that now the trend will start it. It is my observation. And when you will see at the alligator, also it will approve you, yes, your analysis is perfect. Then you will get more confidence to enter in the trade.
Can you repeat this again, sir?
I said that when you are analyzing the market, and after analyzing the market, your decision was that the market will change the uptrend, right?
Yes.
And it started when you are coming on the 1 minute on alligator. Alligator also, if say you this the trend is started, your decision and this analysis is matching to each other, right? Then you will get the more confidence to enter in the market. But if your analysis say downtrend, your analysis say downtrend, and alligator say uptrend, there is a contradiction, right?
Yes.
So it means you observe this condition. Why? My analysis say downtrend, alligator say uptrend. There is something wrong. You need to observe. But if your analysis say it's an uptrend and alligator say it's an uptrend, both you are right, then you can take an opportunity, right?
Yes, sir.
The higher time frame, only 5 minutes if you are using. See, the 5 minute still is an uptrend, right?
Yes.
But you know that a lower time frame will change immediately in a trend, and higher time frame will change after the lower time confirm the downtrend, and then the higher time frame will confirm you that the downtrend is started. So it is common. It is common. Don't confuse yourself. In the 1 minute, I'm looking, it's an uptrend. In a 5 minute, it's a downtrend. So what is the condition? Because 1 minute will give you pre-signal for the uptrend. Higher time frame will give you late signal. If this trend is started on the, if downtrend is started on the 1 minute, in the H1 there will be no downtrend, right? It's only just preparing for the downtrend. But M1 immediately it will give you the idea that the trend is trying to start it now. First, the trend will change in a 1 minute, then it will change on a 5 minute, then 15 minutes, then 30 minutes, then on H1 it will be changed. Okay.
Okay, sir. I have one question to ask.
Yes, brother. Ask question.
Yes, sir. If I initiate a trade, that's if I find a good opportunity and then enter the trade, and then set my profit target, and then I find out that the spike, it will spike above my set profit target. Can I adjust the profit target? Can I extend it?
When if you already set the take profit limit, then automatically trade will be closed. You need to enter again. If your TP is not set, right? Then you can hold. But if you define that that will be by TP, right?
Yes, exactly.
If spikes broke your TP level, automatically trade will be closed. If you want that again I need to enter, then you can enter again, but on this broken of the level of the TP, automatically trade will be closed.
It will close.
Yes, automatically it will be closed.
But if you leave it open and you are in the profit, so it will keep going.
Yes, if you are thinking that I started from here, market is moving in a momentum
direction,
so then you can change your TP from when it reached to near, then you can change here to here. Before crossing this TP, you can change, but once the spike cross your level, trade automatically will be closed.
Will close, so you have to wait for another opportunity to enter the trade.
Other opportunity you can take, again, you can enter the trade, but here automatically trade will be closed.
Okay.
Okay.
Okay. Yes, sir.
Yes, Harish is there. Hello, Harish.
Yes, sir, I'm there. I'm present.
Okay. So Harish, you can see that how alligator is working. Rather than moving averages, we will use the 30, 50, 100. Those will not give you the correct information as alligator is giving you the correct information, right?
Yes, I'm surprised by performance of this alligator.
Yes, it will confirm you the trend when it will change. Moving averages will not. Moving averages when it will changes the direction, it will take too much time, right?
Yes, sir.
But these moving average of the alligator immediately will changes the direction, and then you will get at the top of the exit, not at the half of the entry, right?
Yes, sir.
Okay.
So with this one, I can guarantee everyone can make $10, $15, $20 in within 1 hour time.
If he apply the rules, right?
Yes, sir.
Because this strategy, if you are not using the spike catcher, only you are using the alligator, this is a one kind of a strategy, and this strategy you will never see anywhere, because we created this strategy with so much research. That alligator is confirming us that where we can enter, where we can exit. So definitely he can earn money from this strategy. Okay.
Sir, this
yes, brother.
This indicator was the one you shared with us yesterday, right? The one of
yes.
15, 200, and
that is the other thing. Okay, look at here.
Yeah,
I'm adding the moving average and then see the result, right? There was a 50. There was a 50. And there was a 100, right?
Yes.
And then another was a 200, right?
Yes.
See, I'm changing the alligator here, right? Now these moving average, what shown you? Alligator is showing best or moving average are showing best?
The alligator.
Here, is there any confirmation? No, right?
No confirmation.
But when we will add the alligator, it is best and not disturbing your chart also.
So is it default settings?
No, it is not a default setting. If default setting you will use, you will not think these things. The default setting of the alligator is this one. Uh, 13, I think 8, okay, reset here. So 13, 8, 8, 5, this is a default setting.
Okay, this is default setting, okay.
Now this is the alligator.
No, this one is bad.
This one is not, right?
Yes, it's not showing anything.
It will not show you the trend, right?
Yes, it's not.
When you will change the setting, what will be the setting? 100, 100, 100. Here will be 0. Here will be 115, 15. Okay, minus 15. Now it's okay.
Yes.
It's still low. It's still there is a. Okay, so the smooth change into linear weighted, right? And median change into kilos. This setting is also, take this picture of the setting. Here I took the picture, I will send you. This setting we required. Then okay, now it's okay. Right? Now it is confirmed trend is changed.
Sir.
Yes.
I have something in my mind. I want to be clear.
Hmm.
On alligator, we can see the correction of the trend, right?
Yes.
Yesterday on the moving average, you told us that we can take the right entry point on moving average. So we can make another chart and put the moving average, take the direction of the trend from alligator and the right entry point from moving average.
Look at brother, you will be confused if you use like that way. Alligator is what?
Not in the same chart.
Alligator is a moving average.
Oh, I got it.
Alligator is a moving average. The setting of the alligator is a 100 moving average we are using. Which moving average we are using?
100.
100. Okay, let's see. I'm adding the 100 linear weighted. Which moving average? 100 linear
You told
weighted.
us yesterday that we can the signal of like this, yes, sir.
It is the same. 100, which I added the moving average, which is the same.
Right.
So this is also moving average, which is 100. This is also a moving average, which is 100. But this moving average is minus 15 period shift back, and this is a plus 15 period shift back, shift forward.
So
right?
You can right. So we can take the entry point after the signal is appeared in there.
When the signal will appear, the condition of the alligator will be this one. You are not using alligator for another thing. Only this is your confirmation that alligator is a parallel line or it is a crossing to each other. If it is a parallel line, it is showing the uptrend, then you can use these all signals. It will work for you. Even you are waiting, right?
Right.
Okay.
Only, but we are not taking any entry from the alligator. Don't confuse yourself. Alligator, what confirm you? The trend only, it is confirming you. Only.
Okay, sir.
Now, this is the trend is not confirmed. Don't take
Not
any
confirmed.
signal here, right?
Yes, yes.
Only just to look at that the trend is uptrend. I am taking all the signal. Focus on the signal. Focus on the signal only. This is just a trend confirmation. Okay.
Okay,
But
sir.
don't think that when the price will come back on this line, I will take entry from here, I will take entry from here. This will not give you the opportunity to enter here or here or enter here or here. Only follow the signals. This is your confirmation of the trend only. Okay.
Okay, that's the point.
Yes. Don't think that on this moving average, because it is a shift back and shift forward. Now price is here, moving averages are here, right?
Right.
You will never get any entry to touching the moving average, then you will enter for the spike. It will not give you. Only the below level will give you the entry. This is not, and this is not will give you, right?
Right.
Okay. Because below level is not shifted. Okay.
Okay, sir. That's the point.
Okay.
Thank you.
Thank you.
Okay, so can we see it in the crash?
Yes.
The downtrend.
Okay,
Let's see how it is.
Crash
Yes.
1000. See.
Yes. Yes. Okay. Okay. Oh.
Now these signals are perfect. Look at the condition of the signal, where signals are appearing, and what is the condition of the alligator. See. Now here we got a spike. Still there is no change in the alligator, right?
Yes.
Because the market is in a ranging, and it is a very clear confirmation that you are in a ranging here. You are in a ranging here. When the trend will be confirmed, the low point of your range will be broken. Then it will give you confirmation. Immediately trend will not change in uptrend. Now we are going for the downtrend. still there is a chance for the ranging. Maybe market will move up again, then move down. Finally, it can give you any trend. So now there is no any confirmation of the downtrend still, because it's a correction here. Okay. Here you can see we was on this signal, right? And then after it give you a spike. Again, it will give you a spike very near. The trend confirmation is very clear now. Okay. So if there is any other question, then ask me, brothers. Otherwise, I select another topic.
All clear. But
Clear?
are we going to talk about money management and risk management?
Something about the money management we already talked, and then more about we will talk on the Monday on the money management. Okay.
So
Very clear. We will give you the chart, how much you are investing, and how much lot size you can place, how much you can bear the loss, and how much you can expect the profit. Right?
Yes, we need that, sir.
Okay.
Yes.
Now the another thing. Remove all these things. Okay. On the 1 minute, where spikes can be happen, we are going to use the Genfen. What? Genfen. Okay. The Genfen you can use on the 5 minute, you can use on the 1 minute also. What's the property of the Genfen? You must be master in the Genfen setting. Here select uncheck the downtrend because we are using the boom. When we will use the boom, we will uncheck the downtrend. Okay. I select the lower low point, which is this point. That is the lower low point. And then I drag, which is the current price. This is the current price. See now, these levels are what? This is the one kind of trend lines. One kind of trend lines. And it is giving you the resistance area or support area. So you can expect, but don't rely. You can expect that this can be the support if my analysis and my indicator or my other things are confirmed that this is an entry I can enter. So after this level crossing, you got a spike, right? Next time, don't use this level. First time if you use, next time don't use. Next time a second level you can use. Now there is a possibility after this, within the 2 to 3 minutes, we can get a spike. It will be your trend line. It is your trend line. You can use on the 5 minute also. The 5 minute, this level to this level, it will give you the support levels. You can see price how it reacts on the support. That is a high price. It is reacting on the support. But we was in a downtrend, right? At this downtrend, you can take the same thing on the downtrend. Now select for the downtrend. And this is your lower low. Number 1 line from the topward, number 2 line, number 3 line, number 4 line. And then number 1 line from the bottom side, number 2 line from the bottom, 3, 4. These are the expected reversals areas. These are the expected reversal areas. If the price is following this one area and this one area, it is a sign of a strong downtrend. It is a sign of a strong downtrend. Now you can see here, this gain fan you can use when the price is moving down. You can change the entry, the condition of the gain fan. Here I used, this is a lower low, that's why I select this point. High to low point we will select. If the price was here, when this was a high, when this was a low price, I select this gain fan conditions, and you can see from this point to this point how gain fan give me the entry points. That this will be your level. From here you will get the reversals always, and you can see price is following this level. It is little bit difficult. After practice you will understand that how we can use, because when there is no support and resistance, when you are thinking that market is not giving me any support and resistance, there is no price action at the past, you can use the gain fan. It is an extra tool if you want to use. On the boom 1000, 5 minutes you can select and see where will be the reversals possible. Use the gain fan tool from here. This is your lower low. You select in an uptrend because you are checking the uptrend. Go here and uptrend. This is your high. Now the gain fan is not showing you the upper levels. What you need to do, go inside in the properties of the gain fan. Here you just to enter the 10,000. On the 500, select the 1,000, and the 1,000 pair B1000, you select the 10,000 here. Now it's working for you here. So these are your expected support and resistance areas. You can use as a support and resistance areas. It is a trend line. On the crash 1000 on a 5 minute, there was a downtrend from here to here. You can use this level. So now it is showing the lines are moving in upward because it is showing the uptrend. We need to see the downtrend. Tick the downtrend and it will show you downward. This is your low point. Now, these levels will show you expected support and resistance areas. When the price move here up, it will be your resistance. This will be your resistance. This will be your resistance. When price is moving down, these levels will be your support levels to use the gain fan for just a support and resistance. Okay. It is not too much attractive tool, but maybe someone is interested to use the gain fan. Only in this way we can use in a boom and crash. Okay, brothers.
Okay.
But the alligator condition, you study on the alligator condition and check and then practice on it, you will get too much profit on the using of the spike catcher and alligator. Today I will give you all the license on the spike catcher. I will provide you, install on your computer and start the trading, start demo trading first, and when you get the profits, and then you can deposit and then start the real trading, right?
Right, sir.
Okay. So we are going to finish the session here. If there is any question, you can ask.
Yes, please.
Yes.
It's a last session. I think I have a question, not this session. I need you to show me the M pattern and W pattern variety.
M pattern and W pattern, right?
Variety. It's the variety of them that what they can appear like.
A live example of the W and M, right?
Yes. And variety of the appearance. The different appearance they can appear in the market.
Okay, different. You mean to say different variation of M and W pattern, right?
You're right.
Okay.
Okay. So there are 16 patterns of the M and 16 patterns of the W.
Well,
okay. When you will know all about the W and M pattern, So there are 16 variations of the M and 16 variation of the W.
Yes.
Okay. Wait, I'm showing you something and I'm giving you one thing. You can study that one. You will be clear about the M and W pattern.
Okay, sir.
This is showing you the uptrend, right? This is
Right.
the condition of the uptrend. And that is the condition of the downtrend. This is one kind of W, right?
Resistance. Right.
Before the W, what are the conditions? Downtrend, right?
Trend, yes.
And then when the trend changes, it creates what?
The
W.
W.
And then what starts?
Uptrend.
Whole it is what?
Market structure.
Right?
Right.
Here, these are the candles. Everywhere you will find the same candles, right?
Right.
This is a downtrend. This area is a downtrend. When downtrend changes in an uptrend, you can see there will be the W, right?
Right.
And then price is moving in a upward direction. Whole it is what? Market structure, right?
Right.
So there are five patterns of the M I described here, which is common and which is you will find every time. Okay.
Okay.
This is your M. One kind of this is M, right?
Right.
This is another type of M you will find. Okay.
Okay.
This is another type of M where the both levels are
It's the same.
same. It will be your M, right?
Right.
Here it will be the triple top. Okay.
Okay.
After triple top, these condition what showing you? This one and this one and this one. M, right?
Right.
This condition, this condition, this condition. It what show you? M, right?
Right.
But whole it was showing triple top, right?
Right.
This condition is a one kind of M, right?
Right.
So these are the five patterns you will find always. And the W pattern, second pattern, third pattern, fourth pattern, fifth pattern.
Okay. Can you send this please in the group?
Yes, this PDF file I'm going to send you in the group, right? This is a market structure, but here what we
Thank
find?
you, sir.
Only the M and W, right? A simple.
Right.
Excuse me, sir.
Yes, brother.
So 16 pattern I have posted in the group.
Yes.
Can you explain that one, please?
In the group you sent.
Yes, sir. In this second batch. Yes, sir.
Okay. Wait. These are the pattern. 16, right?
Yes.
Which are workable? This one, this one, this one, this one, this one, this one, and this one. Why this one not? Because market structure say it's still downtrend. It is a weak condition of the W. These are the weak condition. These we will not use. Where you see the direction of the W in an up direction, this is more strong condition for changing the trend. This will be the more strong condition. But these condition sometimes reverse, sometimes not reverse. Only follow these conditions. Same for the M. Which condition? Where you find the direction, it is moving down, right? These condition you can trade. These are a strong condition for changing the trend. Also, this one, when it work, when there is a divergence, when there is a, this is a M, and oscillators say this one, right? Oscillator, it means RSI say this condition and M say this condition, then you can use this condition. Otherwise, these condition without divergence will work for you. Without divergence, it will work for you. But these condition, the blue condition, it needs the divergence confirmation. If there is a divergence, then you can use these conditions. Otherwise, not. Otherwise, you will be trapped. So blue condition we can use with the help of the divergence. And other condition you can use, they will work for you. Clear, Harish?
Thank you, sir. Yes, sir.
So divergence is important also. Okay?
Yes, sir.
And Mohammed, these are all the patterns. Then find how many patterns you can remember and you can trade.
Okay, sir.
Okay?
Okay, got it. Good.
Okay, brothers. Thank you so much for today. Inshallah, on the
Thank
Monday
you,
we
sir.
will meet. The Monday is a risk and reward lecture and question and answers, right? If you have queries, note down all the queries one by one. Everyone can ask the queries. Okay?
Okay, sir.
Okay.
All right, everybody.
Thank you.
Thank you,
brothers.
Mr.
Thank you, sir. Thank you, Mr.
Thank you, sir.
Yeah.